Hey, how you doing?
Hello, Adrian. I'm fine. How are you?
Good, good. Can't complain. Finally, I get to put a face to the name.
Yeah, me too. Although actually, I've seen a lot more of you probably than you've seen of me, but that's true. So,
Yeah.
sorry, go ahead.
No. I just wanted to say, thanks for having me. I mean, I really appreciate this. It's awesome to be on your show, and I've also loved your content and the feedback and everything that you give. I like the fact that you're very candid about the way that you express yourself. Especially regarding your market views. Always appreciated.
Yeah, that's true. Yeah, maybe more than I should, I suppose. But I
I have
guess
that same problem. I have the same problem, so don't worry.
yeah, I've actually I listened to your well, first of all, let's introduce you. So, welcome. So, Adrian Alberts from BlackHeartRedSpade, as you can clearly see from the logo there, and it's a pleasure to have you on FreeFX. And just wanted to say thank you for making time today. What time is it where you're at the moment?
It's 12:32 on my side, so GMT plus two.
Okay, cool. So so not too extreme then. There's always the
Nah.
challenge of interviewing from other parts of the world. So first thing I was wanting to say was love your channel, and you're a bit of a breakaway from a usual. So this interview series has been all kind of about women in finance, because that's a really different space that's not been explored a lot. As you know, there aren't many kind of voices in that space compared to men. So I've kind of been kind of working on that. So, but I just wanted to talk to you about sort of your background and things, and I've obviously done a bit of prep work, but I might go off
You
script a bit,
did.
so be prepared. So,
It's okay. Let's wing it when we need to.
yeah, exactly. Well, Adrian, thanks very much. So, my first question is: you've obviously done a lot of things, internet design. You've got health
Mm.
supplements, debt financing and project management, trading futures and options, and then eventually, obviously, your current project, and but still involved in finance. So there is no one kind of route into finance, and was it the people that and the options that they provided for you, your connections that kind of brought you to where you are, or did you always know you wanted to be there?
Uh, it's a combination of both. I mean, to put it to you this way, I've always had an interest in the world of finance and stocks and all that stuff. I grew up in an entrepreneurial home, and I just didn't have anyone to guide me in terms of getting into the world of finance and trading because, as you've probably also seen, it's a very closed community, or at least it was more of a closed community before the event of the internet and Twitter and FinTwit and all that stuff, where information is so easily and freely accessible now, but 10, 20 years ago, it wasn't to the same extent. So you had to figure out a lot of stuff on your own. And I'm 37 years old now. So 20 years ago was the first time that I ever even heard the word derivatives trading, to give you a rough idea. And when I first heard that word, I thought to myself, gosh, this sounds so incredibly complex and so difficult and this and that because of the way that people described it. But once I learned what it all entailed, then things became a bit different for me. And I thought, oh, okay, so it's just leverage that's being used if you really want to simplify it. And I think one of the things in finance that I've also noticed, and this is just slightly off topic for me too, is that many people in finance love to make this job seem a hell of a lot more complex and difficult than what it really is. I'm not saying it's easy, but it certainly is not the most complex thing in the world. Especially being a trader, because we're essentially just auctioneers participating in a big auction. If we really think about it, at the crux of it. So guys like, for example, you alluded to, before we started talking, Josh Dawson. He was a guy who took me under his wing via LinkedIn, of all places. I commented on a feed of someone else, and he just said, "Nah, that's not exactly what I meant." He took me under his wing, and he taught me to trade in a more quantitative manner. I literally had to go and unlearn everything I had learned up until that point. And then he just helped me to form a better baseline for myself. He taught me to ask myself this very key question: is that my opinion or is that a fact? Whenever I make any comments about the markets, because he always said it's very easy to fall prey to our opinions, but it's far more difficult to evaluate facts. So yeah, I think these people definitely have had a massive impact on who I became, whom I'm trying to become, and just constant and never-ending improvements.
Thank you. Um, my question is about sort of BlackHeartRedSpade as a sort of place where your kind of different interests like physical training and strength and conditioning, Brazilian Jiu-Jitsu, and have kind of come together with your finance side, and also your marketing as well, and connecting with people. So it was the project born out of the need to put these things together, and has it kind of served its purpose in a way? I don't know if that's a good question, but
No, it's a very valid and reasonable question, I think. Uh, well, let's put it this way. The Black Heart Red Spade thing, I originally started it out as trading optionality because I didn't have, well, actually I had the logos and everything, but I've always been fascinated with the concept of optionality since reading Nassim Taleb's book called Antifragile, Things That Gain from Disorder. And optionality, if you define it in the way that Taleb does, is essentially making the right decisions and doing the right things that give you more options in life. So for example, like on an option trade, bet small amounts that are not big enough to ruin you if you are wrong, but give you an outsized return when you are correct. And that's essentially what I try to do with my life, with the people whom I connect with, the things that I learn, the things that I study, the things that I do. Jiu-jitsu gives you a brilliant example of optionality. You can only learn, even if you only learn a few useful techniques, it gives you such an outsized edge over the average person in terms of having self-defense. The same goes for weightlifting. The same goes for calisthenics, eating well. In essence, it boils down to this: doing fewer of the wrong things and more of the right things. And that just expands your optionality. So I hope that answers your question.
yeah, yeah, it does. Yeah. So how much of your time do you spend on, say, trading versus or maintaining systems if you're doing it sort of in an automated fashion versus, say, a physical training or doing podcasts? What's your day look like if you were to give a general kind of
Well,
routine?
at the moment, I'm also doing a degree in business administration. So a fair bit of my day goes towards doing working on those modules. But in the morning, to give you a rough idea, so I would wake up, I do my meditations on most days. Some days I forget or I'm just in too much of a rush, but I meditate. I do a bit of physical training in the morning, just some movement to get myself going. I check what's happening on the markets. I read the overnight news. I check the overnight action. I try to ascertain what type of day this is likely to be by looking at, for example, the volume profile patterns. Is this going to be a balance day? Is this likely to be a trend day, reversion day, whatever you can think of. So then I spend a lot of time on this because I love the game. But as I said, I also try not to get too consumed by it because I've noticed that I sometimes have obsessive tendencies where when I get too into markets, I often miss the wood for the trees. So it's I see you can relate to that in some aspects. And I think that's what the game also does is you should love the game, I think, if you want to be successful at the game, but never forget that the game doesn't love you back. The markets don't care about you or your existence. They simply are. It's one big organism, one big collective of millions of people trading trillions of dollars at the same time. And our job is to extract what we can from it while not losing ourselves in the process to it.
Yeah, yeah, because in an interview you had recently about sort of burnouts and people who literally just do not take care of themselves, and they just keep having to put up this persona of being always available, always always on the game, and they just burn out mentally and then physically. Yeah, that's definitely something to take care of. So that's quite a busy day anyway that you got. So I imagine that's a good balance though of physical and, as you say, the mind and the body really take an important part in all that. Doing the right things gives you more options because you're more refreshed and you're not sort of consumed by it. Definitely, there's so much to read, even the Twitter space, and it's just a feed of constant, and then it's separating opinions from facts, and then
And
I
there's a
find
lot of nonsense on there too, don't you think? Like a
can
lot.
can be, yeah, and then it's really difficult to separate, and even with the blue tick
Hmm.
now. So you know that some sources are more credible, but it's still very difficult for a newbie, especially. I mean, I've I've been in the kind of forum spaces with like traders, new traders asking all these questions. Where do I get the information? And if you know of good sources, you put them out there, but that even that's not enough, because it gets lost in a sea of and no one source answers all questions, so it's always multiple sources. And as you say, I don't know about the business admin degree, but sort of finance degrees, that's the other question I was going to ask you. How do people educate themselves with finance? So your route was quite sort of uh, quite interesting. And some people, got on the trading floor pits when that was still a thing, literally just asking somebody and then getting on that with no experience. They were trading hundreds or thousands of dollars, and just learning on the job. But now it's very regulated. So how do people kind of get educated about finance through a degree only? Is there any way that you think people should be exposed to this in a kind of from an early age, just know about not just finance as a job, but just kind of managing your, putting money into some kind of wealth, or, working for itself in a way? What do you think should be a way to get people interested and also responsibly in charge of their own wealth going forward?
Well, I would take a slightly more philosophical approach to the answer that I'm going to give you here. And that's also to do two things. One, create an image that, or rather remove the perception that working with money and understanding money is boring, or that you need to be super intellectual to have an understanding of how it works, because that's just Wall Street nonsense a lot of the time. And even Wall Street guys I know will tell you exactly that. There's this perception that you need to be incredibly numbers oriented and incredibly gifted and smart, and then it's only for a select few people who can learn how to work with money. But I know some people who have very little formal schooling who are incredibly good at working with money, because they respect money, they understand how it works and all that. And at the end of the day, it is a tool. I think too many people define themselves by money, to be very honest with you. I think that's also where a big problem comes in, and that's why people often end up studying things or going into routes where they think they're just going to get these big piles of money and stuff, and suddenly I'll feel complete as a person. I'll be happy then. And I think there are just better ways to go about that. And that's something that I would like to, that I would personally change from school level, is that, you need to learn how to respect this tool, because it's an incredibly important one to have, but also remove a lot of the theoretical jargon that bores people. No one really likes jargon. I don't like jargon. I've had people from investment banks, for example, when I used to be a broker, speak to me in jargon. And I would actually say to them, can you please speak to me in English? Because if you speak to me in jargon, I'm not part of your special club. I don't know what your abbreviations are, but if you actually say what the words are, I will know what it means. Like, for example, MBA, which in their context is mortgage-backed asset, can also mean Masters of Business Administration, for goodness sake. So it's just a random example that I would use there. But the other aspect of money is also make it more tangible. Show people how it's actually applicable to their lives. I used to suck at mathematics, for example, because I had no way of knowing how I would actually use this. And, when we look at a dopamine level, for example, if you don't understand why you're going through the struggle of learning something, you remove the motivation of actually pushing through and actually seeing, oh, this is what I can potentially achieve with the struggle that I'm enduring at the moment. And because people don't like to feel stupid. Mm-hmm. So those are just a few aspects of what I would personally incorporate, when it comes to financial education and stuff.
Yeah, absolutely. Yeah. And it's also to do with, I think you mentioned before that we also kind of push for people to specialize. So like, to be good with money, you have to be an accountant, or you have to learn in an investment bank, or you have to learn about mathematics, as you say. But actually, as you say, there's a lot more applications of practical finance that can get people interested. And as you said as well, I think being a polymath, so like being good at many things, it is actually very helpful. Like, for example, if you want to, being good with money is one thing, but you have to be good with people as well. So if you've got a business, there's the people side is very important, because without people, there's no business. So if you want to be good at medicine, you had to be good with patients, be able to speak to them about difficult things. Otherwise, you're a terrible doctor. So it's like we focus so much from late school, to specialize, but then you get kids who are not complete human beings almost, that they just need to pass these exams always. And I feel maybe you're onto something there, Adrian, about being good at many things before specializing, not just in finance. But that kind of takes from the next question, which is, do you think there's a divide between in this sort of in the finance world, the sort of corporate world, and is there a divide between men and women? Sort of how do you, because I've sort of listened to your story, and there's been a lot of men sort of in your life, kind of sort of networking, but I wonder if why there's this sort of feeling that men look out for themselves or for each other, but sometimes women are not in the conversation as being part of that club almost, especially in
Yeah,
finance.
the old boys, we call it the old boys club, if we're very honest. Well, I think one of the things that you often find is that trading and finance is a very male dominated world, and I don't think that's necessarily by accident. And by the way, I'm not saying that women cannot be exceptional traders. I mean, Linda Raschke, for example, is one of the best traders in the world. I mean, yeah, Kimberly Jen on the other day, she's also great. Mama Angie. There are multiple great women traders out there. And there's also this book called The Hour Between Dog and Wolf by John Coates that I read, which is about testosterone, how testosterone fuels bull markets and how cortisol fuels bear markets, for example, due to risk proneness and risk averseness. And what Coates also concluded is that had there been more female traders on floors during the dot-com bubble era, we would likely not have seen a dot-com bubble in the first place. So I'm all in favor of there being more women in the trading and finance world, because I know women who are absolutely brilliant risk managers, which, by the way, most people forget is your first job as a trader. If you're not a good risk manager, you will not survive in this game. I don't care how good you think you are, how clever you think you are, you won't make it. So forget about it. I'd rather be, and many people also have this really weird perception that, and maybe you can answer the question for me on this one, mate, but this whole notion that, well, if you want to be a trader, you need to be a gunslinger. It's all high risk, high reward. And I've said to them before, do you realize what you are saying by saying that you want everything to be high risk? High risk does not imply high reward by default. Otherwise, the word high and risk would not be in the equation. There would just be guarantees. But it's that perception that you need to be tough, that you need to be brutal and all that stuff. Meanwhile, you just need to be calm and level-headed. That alone will already give you far more of an edge in the trading world than being this aggressive, chest-beating brute who just charges ahead. And yes, sometimes it works. It works beautifully, but you will encounter situations where you need to take a chill pill and just take a step back and not let your testosterone run rampant with you. And that's why I think having a great blend of women and men in a trading environment would actually be a really, really positive thing for markets, because then you get the blend of that extra testosterone, for more risk-taking ability, but also the more sensibility of the female, like a yin and a yang. Let's use a yin and a yang. It's a beautiful example. Both in focus and harmony, but neither favoring one side or the other. That's the way at least that I look at it.
Yeah, sort of. So we need a bit more BlackHeartRedSpade. So thinking of it in a slightly different way. Where the qualities that we associate with one gender, are not intrinsically valuable. So we had all sort of brochures, and whenever you hear sort of reliable and professional, and there's a finance kind of package, there's a man in a suit usually. It's sort of like this sort of we just go to image
the stereotype.
That's the professional look, which is quite strange. But I think that's what you said about. There was something that you mentioned. Oh yes, so you talked about strengths in an interview previously, Adrian. There was something about we can't eliminate our weaknesses. That you hear a lot about sort of if only you can get rid of your weaknesses, or and in a way that the trading world is full of that. We can be great for a number of years or months, and then we do something stupid because we get our ego takes over or something, and we just forget that we're supposed to not do certain things. The weakness there is obviously greed and wanting to just cash out on a big move or something. And so, what's your recommendation if people wanted to work on their strengths? How should they think of that? Is it physical strength? Is it how would you sort of approach the strength conversation?
That's actually a very good question. I would look at it from this perspective that you need to you need to realize that you're a constant work in progress. You know, just because you reach a certain level of strength doesn't mean that that level is going to be enough to get you to the next level, you know. But I approach trading like I do workouts, for example, and this might sound really weird to say this, but there's a concept in working out known as progressive overload. You don't simply walk into the gym and lift the heaviest weights on the first day. You start lighter, and then you build up, and then you progressively overload as you go along. Because if you try to lift too heavy or try to do something too crazy, let's say you're not very flexible, for example, you want to improve your flexibility. How do you do it? One day at a time. You don't just go and put yourself into the splits. You'll tear your adductors. You know, you don't just go and lift. Why is this principle so difficult to understand in finance? Why do you need to leverage your account to the absolute max just because you have the leverage available? It's a facility. It doesn't mean you have to use every single cent of it. And I think that's why many traders blow out to begin with, is because they feel, oh, I've got this leverage, which is strength. If you really break down to it, you've got a lot of financial strength at the tips of your fingers, you know. And I think that's also the thing, by the way, that just comes to mind. Why trading is such a difficult profession is because you have been given all this strength that we've just been alluded to, but all you need to do is just click, you know, just a little click of a button, and all you see is numbers going up and down, and you don't really understand what you are dealing with when you are new in the game. You don't even know how vulnerable you actually are. So that's why I would say start smaller. Get used to your own self. Learn how to handle yourself before you start trying to handle a market, because handling yourself already is quite a task. And I mean, even the best people I know still have daily struggles in terms of how they handle themselves and try to keep their egos in check, because boy, that bugger loves coming out, doesn't he? You know, here, and you're laughing because you know exactly what I'm talking about, because we all are susceptible to it. It doesn't simply just go away. So you can control it, but one of my personal strengths that I've developed is that as soon as I start feeling or just whiffing to myself, yeah, I'm good now, I shut everything off. Literally, boom, I cut it there and then, because then I know that is my lower self starting to kick in, and I'm really about to make some mistakes. So I think that's where strengths come in. It's not always about acquiring new skills per se, because skills will come as you go along, but learning how to handle yourself. What can I handle? What can't I handle? What am I good at? And what am I really not good at? That is the real starting point for me.
Yeah, thanks so much. That's a great explanation, actually. And I think is there any book that you recommend, or any website about that particular topic?
I think Iron Between Dark and Wolf is one of the better books, because it does explain, you know, how hormone driven we are. And when you see how hormone driven we are in certain respects, especially with regards to ego and money, then that gives you a great edge. But another book that I also read that really had a big impact on me was The Psychology of Money by Morgan Housel. A lot of the concepts might be familiar to people, but he repackages it in such an awesome way where you learn to have a completely different look at wealth and, you know, money and all that stuff. And by the way, I'm not an anti-materialist. I'm a trader. I'm a capitalist, you know, so I like nice things. I'm ambitious. I want to do incredibly well. But I think one of the big keys is you have to ask yourself honestly, do I own my money, or does my money own me? You know, and that is And that is one of the big things that I want to own my money. I don't want my money to own me. I don't want a single thing that I have to own me and to define me. I give that thing meaning, not the other way around. So I'm not saying that go live like a hermit in the mountains. Get yourself nice stuff, enjoy life, do all these things, but don't let those things own you. You own them.
Yeah.
And always keep that in mind.
And that's the COVID conundrum, isn't it? And people in any walk of life realized how important family was, and that all the money in the world, I suppose it's cliche, but it doesn't buy you family, or it doesn't buy you personal relationships, it doesn't buy you so many things. And it's really a struggle. If it's money's like an addiction, isn't it? It's like, but
it can be.
It's all consuming, and it's it can ruin your home life. It can ruin things if you are just consumed by having more of it. As you said in your interview, I think it was your last interview with regard to people who have all the money and the cars, etc., or whatever, but they're not happy. So you think, why is that? Because initially, that having more money, especially if you're a younger person, have your independence, ability to provide for yourself, it's a great feeling. So at which point is it too much? At which point does it become an addiction? And that's a difficult one to define, isn't it? But in terms of the markets now, you mentioned volume profiling. What would you use to approach? Say you open the charts and you look at something. What would you do first thing? Is it the volume profile? What does that look like on your screen?
So, for example, if I look at a volume profile just right now here on a 15-minute chart, the overnight action is showing me that we're in a multi-distribution / balanced profile, for example. So if I see a multi-distribution like that, because just to give your viewers an explanation, in case they don't know what a volume profile is, all it is essentially, it just gives you an idea of the shape of how volume is distributed. So if it's like a bell curve or Gaussian profile, with a 68% in the middle, 1 standard deviation, then 2 standard deviations, and so on, all you're essentially trying to do is ascertain, are the participants covering shorts? Are they liquidating longs? Or is it a balanced profile where both sides are winning the fight? It's sort of like a stalemate. That's how I kind of look at it. It's just a tool in the kit. I don't become reliant on any single indicator or thing. I don't believe in signals to begin with. I think most of them are lagging, and so the volume profile is a quantitative aspect that I look at, because it is quantitative. You don't have to program massive algos and stuff to be quantitative. And I also look at opening ranges, for example, like at the beginning of the day, how wide is the range? How wide or narrow? What was the overnight range like? I don't care for patterns so much, but sometimes they can just give you a very brief overall visual of, how are things shaping up. I think technical analysis is a great tool, but people become over-reliant on it. And the same way they do with macro, the same way they do with fundamental, I say use all of them, and that's like what my mate Chris Siddle said. The sweet equilibrium is to match the quantitative side with the discretionary side. And if you merge those two, you can actually form a system that can work very well for you. But the key is on for you, because you're not easily going to be able to find a system where you just copy it and there you go. You just make a lot of money, because I think trading is a very individual pursuit.
Yeah. Yes, absolutely. Yeah, it is, and it's based on your knowledge, as you say. You have to learn a lot of stuff every time you change to, say, if you went into options trading after years of doing something different, you'd have to relearn a lot of stuff. Or quantitative, having done discretionary, you have to learn a lot of stuff. So it's there's a strange divide with the technical analysis. Like I was doing my CMT level 1 during lockdown. I just decided to challenge myself and do some studying, and it was a lot of work, but a lot of stuff I knew already from practice, but I had to sort of study it and memorize a lot of indicators that I'd never used. So, but I realized that the CMT network, there's quite a divide, so that there's the technical analysts, in certain, I can put it, in certain places, it's almost like voodoo, putting lines on a chart. And then you go to India, there are a lot of speakers, there's a lot of attention to technical analysis. It's well respected, and it's, there's a lot of people doing it, versus maybe Australia. I'm not sure South Africa, but it seems to be that.
Yeah, big in South Africa too, to an extent.
Yeah. Okay. And is it more quantitative now? So as well as lines on a chart, now it's got the power of computers behind it.
Yeah, there are a few guys over here who do quantitative things. But the one problem that I have found with trading anything in South Africa is that the markets are not that liquid. You've got a very, very small market universe that you can work with. That's why I focus almost exclusively on the US. Because you have such an incredible breadth of things that you can choose from in the US. You've got the broadest market, you have incredible market depth, your strategies that you can set up are incredible. And options trading is just so easy over there. Like so easy. Click of a button, thank you very much. There you go. I've just set it up. Over here, for example, if you want to do an options trade, you have to phone a market maker. They've got to give you quotes. You've got to put down. Yeah. You don't have on-screen options over here. Wow. So they if you want to trade anything on the Johannesburg Stock Exchange, you need to be with broker. Well, you need to have. I think it's the equivalent of $300,000 or $400,000, and actually you're closer to $500,000 or something in capital that you're willing to put down just before they will give you an options trade. Wow. So yeah, that's why I prefer the US market, because you don't have those limitations placed upon you. Okay. So yeah, technical analysis is also a big thing over here, but I do think that there's a slight shift towards the quantitative side if people are more sophisticated. But for the most part, people just stick to pure technical analysis, and they still hung up on patterns and things, which personally has never really done anything for me.
Okay. In terms of the current sort of situation with the Fed and inflation, and how it's sort of we've got this kind of stalemate between what the market wants and what the market can get. Where do you think we'll end? I don't want to ask him for predictions here, far from it, but you may be in your powers, in which case I will let you tell us. Where do we end up the year? Because there have been a lot of analogs with 2008, and some camp will say, no, it's completely different. You can't put the two together, which is true. But on the screen, the two look very similar. The VIX looks similar, the S&P looks similar, and there's a big curve down in the 2008 curve, which is about to happen. But what if it did happen? And then would that be such a bad thing? Do you think the market's overvalued? There's a question.
In certain respects, I do think it's overvalued, but on the other hand, I also do think we are in a different paradigm than what we have been before, because we also live in an era where stimulus has been a far bigger proponent and driver of market growth than I think at any time in history, if I recall correctly. So maybe the market is relatively, I don't want to say it's fairly valued, because that's a horrific way of assessing it, but more fairly valued relative to the amount of stimulus that got us here in the first place than what it would have been, say, pre-2008, for example. So in essence, I'm just saying it's less of a bubble relative to the large bubble that it was, say, at the beginning of the year. Do we have more tools that can help us get out of trouble? Yes, we do have more tools, but the problem with those tools is that we create bigger bubbles, so eventually the big bubbles start bursting. And the unfortunate thing with that is that it also creates sugar highs. We've all seen how addictive liquidity is and how addictive the euphoria is that comes with it. Everyone starts thinking that they're a great investor or a great trader because the market just keeps going up due to the extra liquidity. But the problem with that is that if you look at the world of crypto, for example, and even look at many tech stocks from this year, for example, and I'm talking mostly the zombie companies, like those horrific tech companies that can't even churn enough of a profit to service their debts, yet they were allowed to stay there. The problem with low interest rates and high liquidity is that it gives people a very false sense of security of how good they actually are. It also gives a very false sense of security of where we actually, of how strong the economy actually is. And I think that we definitely can have a bit of a fall if we're not careful. I mean, caution is warranted over here. I mean, I already see people talking about pivots just because of the fact that we had low inflation report last week. But a pivot, but I mean, am I wrong for saying that just because you slow the speed at which you're running in a specific direction doesn't mean you're pivoting and turning around? The word pivot means to stop, turn around, and go in the opposite direction. We're not even near that, you know? So a 50 basis point hike, of which we have an 80% probability now, according to the latest Fed tool, that's not a pivot. That is just a slowing, that's just a slowdown. It's like driving somewhere, for example, and you just slow down as you go through windy bits. That's it, you know? So I don't get the whole pivot narrative. And I think the market's addicted to that because, no, we want a high. More of that euphoria, more. And if we can stop ourselves from falling prey to that, I think we can survive it. Mm-hmm. But that's a big if.
Yeah. There's a lot of options being bought, I think, around this 4,000 level. So there's options expiry week, and it feels weird that a whole market should be driven by options rather than by fundamentals. You know, earnings weren't that great, big companies, you know, QT. We're talking about options driving it. It just seems counterintuitive that that's what this is. Is it seasonality then? That's all that's left to do between now and Christmas? I don't know.
No, it is a bit of a tough one, and you're right. I think the options that we see driving it are also just people taking massive bets because they don't want to take delta one trades at this particular point. But at least that's one of my big guesses. And while we have a VIX at these elevated levels, which it actually is relative to normal conditions, you know, some might actually feel, hey, I'll generate some premium by selling some options because, you know, VIX at 25, 26, it's not that bad. I still get a nice bit of premium and all that, but it is an elevated level. It does show that we are actually not in Kansas anymore, and we haven't been at a normal level since, when was it? Pre-2020. I don't think the VIX has dropped below 16 since March or February of 2020, which even then is a mid-level VIX. So yeah, I don't have all the answers, I'm afraid, but you're right. This is options driven, and you see a lot of gamma hedging and delta hedging and all that stuff going on. And that's why we have so much volatility, because what is volatility after all? It's a function of dealer hedging flows.
Yeah. So Santa rally, maybe, question mark, who knows?
Who knows?
Who knows? Unfortunately, we're out of time, but I'd like to thank you really for your time today. It's been a great conversation. Lots to think about there. So I'll put the recommendations for books and things in the notes so that people can. Where can people reach you?
On Twitter, BHRSpade. BHeartRSpade. That's my handle. You have it in any case. They can also just go to my website, BlackHeartRedSpade, or find me on LinkedIn. I'm mostly on LinkedIn and on Twitter in any case. I don't really check my site so much. Okay. But if you want to read more about me, I'm on the site and my YouTube channel. You can also go there. And yeah, well, now I'm here too.
Great. Thank you very much, Adrian. It's been a pleasure talking to you.
Thank you to you too, kind sir. Much appreciated.
Thank you. Take care.
Thanks. Bye-bye.